Hello, assalamu alaikum friends. Welcome to question number 10 of SBR. Uh, as you can see the background, Weston has appointed a new financial controller. Weston calculates cash generated from operation using the indirect method. The following information relates to the financial statements of this one. So you have been given the financial statements, as you can see, right? When you are given financial statements and all, the one good thing is you can save a lot of time because you don't have to read this information. You can just skip through all this because these are numbers, and you have been given the profit and loss and other comprehensive income. And as you can see, under other comprehensive income, we have discontinued operations and continuing operations, which is new in this question. It was not seen in the previous 9 questions. Okay, the two operations are divided. Okay, so when we have discontinuing operations and continuing operations, divided like this. Okay, as you can see here, continuing operations and discontinued operations. Okay, so for continuing, we have profit from operations, share of profit of associate, income tax, and all. And coming to the discontinued operations, we have a loss. Okay, and then we have a note 2. Okay, and where is the note 1? It's not given. Okay, then other comprehensive income which will not be reclassified to P&L, we have the remeasurement gains on defined benefit plan. Okay, and then we have the total comprehensive income. Now there are some notes. Okay, let us see how many notes are there. 5 notes are there, and then you have this requirements. So you have been given a para after part B. That means only this para is required for requirement B. Okay, so you don't need the previous requirements for this one. So let us read requirement A. In accordance with IS 7, statement of cash flows, prepare cash flows from operating activities using indirect method and cash flows from investing activity. You have been asked only operating and investing, so don't go and do financing activity. And that also using indirect method. So this is a very easy question because clear cut. Okay, you have to apply IS 7 they told. Number 1, you have to operate activities using indirect method. Everything is told, and then investing activity. Investing activity, there's no difference between direct and indirect. It is the same, so that's why investing activity. But operating activity, the difference comes in the operating activity. Indirect method. Okay, 18 marks. Just see the number of marks. Okay, so try. Okay, your best focus should be on those 18 marks. Try to get 18 out of 18 because it's very possible that you can get 18 out of 18 because it's calculations, right? And I have previously uploaded a video in IS 7. So you can go and check the 3 videos. There are 3 parts to IS 7. You can go and check if you have any doubt while understanding this question. Okay, when I'm going through this question, if you have somewhere doubt, you can go and revisit IS 7. Okay. Using your answer to part A, explain how to calculate cash generated from operating with the indirect method. Using your answer. So whenever they say using your answer to part A, you need to use the answer. Okay, at least somewhere you have to make use of that answer. You have to explain here. Okay, that's for 5 marks. So you have to explain. See, most of the candidates, they are good in writing numbers, but they are not so good in explaining. That's why we have to go through these things. Okay, in my video, I always go through both the numbers and the theories, not just numbers. So explain how to calculate cash generated from operating with the indirect method. Okay, using the indirect method, how to calculate. That means whatever you have done in part A, basically you're explaining in sentences in part B. Okay, coming to part B, we have this thing. Okay, but at least we can read the requirement. Discuss if Weston's proposed accounting treatment for his investment in minor is in accordance with IFRS. Okay, we don't know which IFRS, we have to see. Okay, in SBR you can be given a question like this also, whether the accounting treatment a company has done, whether it's in accordance with the IFRS or not. Okay, for you to know whether it is in accordance with IFRS or not, first of all you have to know that IFRS, right? So let's go to part B later. Okay, and let us go to part A. You have to go all through these 5 notes. Okay, so we can quickly go through these notes. Okay, this notes are usually for you to do the adjustments. Okay, if you see the note 1 is the biggest note here. Okay, so let us read. On 31st July 2005, Weston disposed of his entire 80% equity holding in Norton for cash. He disposed. Okay, so don't always because it's group accounting, don't always assume as accusation. There can be disposal also. It could be accusation and disposal, or just accusation. Okay, so he disposed his entire 80%. Entire 80% means this word says he hold 80%. He was holding 80%. He was a subsidiary before the disposal. Entirely he sold. Entirely 80% is complete. 100% has been sold. Nothing is remaining. You cannot even say after disposal it became it is still a subsidiary or it became an associate. No, entirely it is sold. Okay, so because some of you, when a sentence like this is written, you will be asking entire 80% means they will dispose 80%, they are holding 20%, and you keep on valuing that remaining 20%. It's not like that. The word entire means entire 80%. They hold 80% in total. The entire 80% is sold. 100% of that 80% is sold. Okay, so they're not keeping anything. This you need to understand. For cash, and the shares has been acquired on they have also been given the date of accusation. Okay, so shares have been acquired on 31st July 2001, exactly 4 years behind. Okay, acquired on this date. Okay, you can write the day. Wait, let me write it. Okay, accusation 4 years back. That means four years they were holding it before they actually sold off. Okay, for a consideration, what was the consideration? You need to know when they have acquired. The reason why they are giving you the acquisition details, why they are giving you the consideration on consideration and all, is for your goodwill, or sometimes you might have impairment relating to goodwill, so that impairment will have an influence on your cash flow. Okay, so for how much? For 132 million, when the fair value of net assets, fair value of net asset was 124 million, included a fair value uplift. So this included what? Included the net asset fair value uplift. That means it increased 16 million in relation to plant. Okay, with a remaining useful life of 8 years. That time it was 8 years. Deferred tax at 25%. Okay, on the fair value adjustment. So deferred tax at 25 on the fair value adjustment, that's 16 million. Okay, was also correctly provided for in the group accounts and is included within the fair value of net assets. Okay, so it is included within the fair value of net assets. Okay, and also it is correctly there in the group accounts. The fair value of the NCI at acquisition was 28 million. So fair value of NCI is 28 million. Goodwill calculated under the full fair value method, which was tested annually for impairment. Okay, that means definitely goodwill first you have to calculate, because without goodwill you cannot calculate impairment. Okay, so even if a question asks something which, for example, a question asks impairment. Okay, it's common sense. Without goodwill you cannot calculate. So even if the question is not asking you directly calculate goodwill, but you need to calculate goodwill, because without that you cannot calculate impairment. Okay, so at 31st January 2005. Okay, when is the date? Look at the date place. This is 31st Jan and you disposed it at 31st July. So Feb, March, April, May, June, July, 6 months before the date of accusation. Okay, I will write 6 months. This is called annotation. You annote. Okay, so that you don't forget to. 6 months, sorry, 6 months before disposal, not accusation. Goodwill relating to Northern had been impaired by 75%. How much? Goodwill impaired by 75%. A goodwill impairment charge has been included within admin expenses for the current year but does not relate to Northern. So, a goodwill, where did it go? It was in the admin expenses for the current year, but does not relate to Northern. It does not relate to Northern. Okay, now the carrying amount on the individual accounts. The carrying amount in the individual accounts of Northern at disposal are listed below. Okay, the fair value adjustment of subsequent not incorporated in the individual accounts of Northern. You see the fair value adjustment of the 16 million and the subsequent, that means based on that the deferred tax, 25% deferred tax was not there in that individual accounts of Northern. Okay, it's there in the group account, consolidated account, but not in the individual accounts. Okay, you need to know the difference. You need to know the learn individual accounts as well as how it will look in the consolidated accounts as well. Okay, so you have been given what are the things: PP, property, plant and equipment, inventory, trade receivable, trade payables, deferred tax liability, bank order. This deferred tax liability is not relating to that deferred tax. Okay, this deferred tax 6 million is some other deferred tax liability. It is not relating to the fair value adjustment 25%, not that one. Coming to point number 2. The loss for the period from discontinued operations in the consolidated statement of profit or loss and other comprehensive income relates to Northern and then can be analyzed as follow. So you have been given this loss, right? 25. So here they are. Okay, you can see the loss on disposal 29. The reason why they have given this is the breakdown is for you to find this loss on disposal so that you can adjust this with the profit before tax when you're doing cash generated from operations, you need all these adjustments. Okay. Point number 3. Weston purchased a 40% interest in an associate for cash. Purchase a 40% interest, less than 50%, but more than 20% is an associate. Okay, and clearly they have told associate, so you don't have to worry whether they have influence or not. All those things is not needed. Clearly they have mentioned associate, so it's associate. 40%. Okay, this is another thing. Okay, that is not this thing. Another associate they have purchased for cash on 1st of Feb 2005. Okay, the associate paid a dividend of 10 million in the year, and how much the associate paid? It paid a dividend of 10 million. All this are needed for your cash generated from operation. That's why it's given in different bullet points. Okay. And in the year ended 31st Jan 2006. Okay, exactly 1 year back. Number 4. I'm sorry. Number 4 is relating to the retirement benefit liability relates to Weston as other companies in the group operate defined contribution schemes. The latest actual valuation is as follows. So you have been given net obligation, service cost, you add contribution to scheme, you deduct remeasurement gains. All those things is given for you to find out this contribution, number 1, and the remeasurement gain and the service cost. All those things are needed for your cash generated from operations. Okay, the figure. That's why they give you the breakdown. So benefits paid in the period by the trustees of the scheme were, how much was the benefits paid by the period trustees of the scheme were this month? 7 million. Western operates in a country which only allows tax relief when contribution are paid into the scheme. The tax base was therefore 0. Tax base was 0 at 31st Jan 2005 and 31st Jan 2006. Tax rate. Why they have given you the tax base? Because for you to find the deferred tax liability. Okay. The tax paid by Western is 25%. Okay, the service cost components included within where's the service cost? It is in the admin expenses. You need to know which one is under which. So when you do the adjustments, you can do the accordingly. And finally, the last point, there were no disposals of PP during the year except on the sale of Norton. Okay, you haven't disposed this one only when during the year except on the sale of solely this you have sold. You have just sold the subsidiary. There is no sale of PPE during the year. Depreciation was 20 million and is included within cost of sales. Okay. So now using this information, you have to do operating activities. Now where do you start? Okay, we all know that cash flows, when you start, your starting point is you have to go to the profit and loss account and find profit before tax. That is your starting point. So profit before tax 183. This is your starting point, and from here onwards you continue doing all the adjustments. And these adjustments only you have to write in the second part of party. Okay, so 183. But before this, let us go to the key answer tips. Read the question carefully and you should be able to find several figures that you can put straight into your cash flow extracts. Associates profit, service cost component, depreciation. Prioritize this quick easy mark. This is essential to pass the exam. Wherever something is very easy, where no working is required, easily you can put it in the adjustments, put it. This saves time, this gives you easy marks. This are some easy marks. For example, depreciation. Already given, just put it. Just deduct it. Sorry, add it. Then the service cost. Add it. Associates profit. Deduct it. You know, so starting with it, before you start, few key things you need to know, especially when you make financial statements, extracts and all. You need to put a label. Clear heading has to be there. Okay, for example, this. Whose statement is it? Weston's group statement. You have to write the group statement. Okay. If you don't write the word group, it will be considered as it's an individual statement. So don't do it. Weston's group statement of cash flows for the year ended 31st Jan 2006. Okay. Clearly label it. It's for part A, second one, and then dollar millions. Okay, and now we are writing each one. Okay, so you need to write proper heading before you write start. What is it? Cash flow from operating activities. What is this? The title for this is cash flow from operating activities. That is the first subheading, because you have other you have to make for investing activity also. Okay, so cash flow from operating activities. You start profit before tax. Okay, so profit before tax, as I told you, is the starting point, and here you have a working one. Now let us go to the working one and see what is it. Okay, see, when you go to the working, just see how clearly they have labeled. Very short subheading you have to use. You have to label your workings. Working one, profit. Okay, under workings, working is the main heading, and then working 1 2 3 4, you have labeling, numbering and profit. You need to use the profit before tax from both continuing and discontinued operations. This is something new in this question. I don't know whether it's there in upcoming questions. Okay, because I'm done, but since now this is a new question which I've got through. When you're given the operations for two, one is continuing, one is discontinuing, the profit before tax you have to use from both. It's not just continuing operations. Okay, so total profit before tax is what? 183 plus 6, which is hence 189. Okay, we'll go and check this figure from the statement itself. Okay, so when you go to the continuing operations, what is the profit? It is 183. Okay, so 183. So this 183 is not enough. Discontinued operations also you have to take. Okay, so discontinued operations, if you see it's a loss, but before this loss, there's a note 2. So go to note 2. Note 2 says there is a profit. What is that profit? This profit. This 6 you have to add with the this one, profit before tax. You see, this is from discontinued operations. This 6 needs to be added 183 to get 189. Okay, so that's why now that's why there's a separate note. Okay, sometimes even for profit before tax also, just see, you straight away you have to see, can you take straight away or you need some adjustments. So when you have operations like this, continuing, discontinuing, you have to do adjustments. Otherwise, normally what we do, we just take the profit before tax, because there is no separation of continuing and discontinuing. Okay, so 189. So let me put tick mark for the things which is over. Okay, you don't have to put tick mark. Okay, definitely it's your exam when you do it, but I'm putting tick mark because that means that item is over. Associates profit, it's very easy. You deduct. Where do you get the associates profit from? From continuing operations. When you see the 16, you see the 16 you deduct. It was there in the continuing operations. Definitely it will not be there in the discontinuing operations. Okay, so 16 is a profit, you deduct. Okay, you reverse your adjustments. Whatever the items you have deducted or add to get your profit before tax, now you reverse it. That's what you do in the cash flow statement. Okay, for example, if it's a profit or income, you deduct. Expense or any cost, you add back. Okay, because you, what are you doing here is you are converting the profit before tax to cash generated from operations. Profit and cash are not the same thing. There are so many other things which might have been deducted or added to get the profit, right? Income, for example, they are non-cash income, or expenses which are non-cash expense, for example depreciation, which was deducted to get the profit, but that depreciation now needs to be added back because you are arriving from profit to cash. That's what you're doing here. That's why all these adjustments are there in the indirect method. Okay, so associates profit, straight away no adjustments. So wherever adjustments are not required, 1 mark only you will get. Wherever adjustments are required, maybe 2 or 3 marks. We'll see the marking scheme at the end of the video. Service cost component is 11. Service cost component is given in the, I don't think it's given as an this thing, but it is given under the note. Okay, I think it is under note 4. Service cost component 11. You need to deduct it because this also comes in your profit and loss account as an expense. So whatever expense comes in profit and loss, you need to add back. Okay, service cost. So this is also over. Next is depreciation 20. Last, the point 5 says depreciation is 20. You add back. Impairment of goodwill. You see, impairment of goodwill was required. So impairment of goodwill, working 5. Separate working is there to find impairment of goodwill. And impairment has to be added, which is 6. We'll go to that later. Let us finish the other stuff first. Cash contribution to pension scheme. Okay, there's a good thing. Okay, let me tell you how to start the cash flow from operations, because there are so many things you might get confused. The best way to start is from the notes. Okay, if you want to start, the best possible way is, first of all, look at your current this thing. Look at your income statement, profit or loss and other comprehensive income, and see what are the profit and expenses. First, do the adjustments. For example, the first item was here, share of profit of associate. This was the first item, deducted. Then we have that also, yeah, the profit, and then profit before tax was the first, and then this was second. Then there are no other items. Then directly you have to go to what? You have to go to the notes. Notes wise you can do 1, 2, 3. Okay, for example, this note wise you can go. That is the best process. So this, and you can put a tick mark whatever the items you have finished. This will give you an idea that you didn't miss out anything. You have covered everything. Okay, everything you wrote the cash flow statement. So next we have I'm sorry, before going to the proceed, what was it? Cash contributions to pension scheme is 19. Cash contribution from the pension you are paying out, so cash will go, so you need to deduct 19. Okay, 19 needs to be deducted. So what is that 19? Where is that 19 comes again? 0.4 we have to go to get that. Okay, it's in 0.4 and this contributions to scheme 19. Okay, needs to be deducted. Always cash contributions from scheme needs to be deducted as cash contributions, right? Next, so we are over with all the items. Okay, please cross check always. Take some time and check that have you included everything associates profit. Are all the profits and expenses are adjusted? First check. Okay, before you move ahead. Then we have movements in working capital. Okay, so in moving capital we have three items: payables, receivables, and inventory. Okay, increase or decrease, increase or decrease, increase or decrease. Now another thing, as I told you in my IS7, if you see my video, this is a disposal scenario. If it's a disposal scenario, you should know whether you have to add the subsidiaries assets and liabilities or whether you have to deduct. Okay, so I have told when it says disposal, you have to add. Why you have to add? It does not matter whether it increase or decrease. Increase or decrease is another thing, but you have to add the subsidiaries part, their assets and liabilities. Why is that? When it's a disposal. See, when it's an accusation, you are buying, right? You're buying the subsidiaries assets and liabilities and also it's a payment from you. Cash will go out from you. That's why it's an outflow. You deduct. But when it's a disposal, you are getting it by you are receiving by selling it off. You are selling the subsidiary. So whatever their inventory you are selling, the subsidiaries inventory has been sold. Or whatever the profit get comes to you. The cash comes to you. That's why you have to add it. Okay. So now we have to go to the statement of financial position for that to check inventories, receivables, and payables. Okay, inventories you can see from 165, 108, it reduced. 165 minus 108, it's an inflow. Receivable increased 104, 106, which is not good. It's an outflow. And payable, if you see, you have to go to the current liabilities. Okay, trade in this one 41 to 36, it reduces, not good. That means you are paying early, you are paying now early. So it's an outflow. But with this adjustment also, that plus and minus, another thing you have to do is you have to go to point number 1. Okay, you have been given in the individual accounts of Northern the value of this one. You see, inventory, this inventory 38, this receivable 23, and the trade payables of 10. All these three needs to be added. It does not matter whether it's payable, receivable, or inventory. It needs to be added. In case of disposal, when it's a disposal in the cash flow statement, you need to add 33, 23, 10. Okay, that's what they have done here. If you see clearly, okay, they have added 10 in the payable, receivable 23, and 38 in the inventory. You see, but they have shown the difference in the statement of financial position first in their statement of financial position, and then they have added the subsidiaries part which they have disposed 10, 20, and 38. Okay, so and you need to write it: increase, increase, and decrease. Please write it, what happened to the trade payables and all, and next to it no separate working because it's very short, just addition and deduction. So write with the bracket within it, you can show the working. Okay, this is the reason you don't have to show it separately, like how we have done for impairment of goodwill, working 5 for profit before tax. So if you see there's an increase in trade payables is an inflow, that's why it's positive. Okay, wherever cash is going out, you have to show the figure in bracket. Increase in trade and other receivables, it's again an outflow because customers are not paying on time, they're taking more customers on credit. So it's an outflow. Decrease in inventory, that means you're selling off inventory, it's an inflow. Okay, without bracket. Finally, the item which you get is known as, please write this label, you need to write labels. Okay, you need to write a heading for each item, just don't write numbers, that's it. Cash generated from operations, this 190 is known as cash generated from operations. From here, what do? You deduct, there is no interest. Okay, usually you deduct interest and tax, but since here in this question there is no interest, only tax you deduct, income tax. And for that also working 7 is there because we have two types of tax, one is income tax, one is deferred tax. We need to do working for it. Okay, so before I go to investing activity, because investing activity, if you see, everything is working is 6 2. So before I finish, let me finish the operating activity. Okay, always be very careful. First finish the operating activity, make sure everything is correct, check everything, then you go proceed to the investing activity. Okay, because when you are correct from the top, very top, right, it's easy to make adjustments below. But if everything is wrong from beginning, then everything, it keeps on accumulating, and then it's a mess. Then finally you will not be able to balance it. So make sure your operating activity is correct. Okay, because investing activity is much easier and simpler. Okay, it's not so much of working is not required in investing activity compared to operating activity. Okay, So let us go to working number. What are the working number? Let me see. One is 5, one is 7. First we'll finish the impairment of goodwill. Okay, so let us go to so if you see, to get the impairment of goodwill, there are so many workings required. Okay, let us read goodwill. That's why it's 5. Okay, don't think, some of you might be thinking how suddenly 5, where is 1 2 3? Sometimes 1 5 2 3 is hidden inside the 5. Okay, it's like to do one working you need another separate working, to calculate that working you need a separate working. You have to separate out in workings like this. Okay, because if you try to do everything in one, is very confusing. It will, you will also not be able to present it also in that way. Okay, so now let us see in goodwill. Okay, please put a label goodwill working 5. Now according to you this number can change. Okay, it's not like working 5 only for you. You can have it in your one as working 4 5 6 7, any number does not matter. What you do in that working matters a lot, and how you present it. So reconcile goodwill year on year to identify the impairment charge. Year on year you have to reconcile the goodwill. You have to keep on checking year on year, then you will know the impairment only. This needs to be added back to profit when calculating cash generated from operations. Definitely impairment is an expense, needs to be added back. Okay, so to find the goodwill, to find the impairment, you have to know the opening balance, you have to know the closing balance. Opening balance is on which date? 1st of Feb 2005. Closing date is which date? 31st Jan 2006. These two things you have to know. Another thing you need to know is, because this is not an accusation, okay, this is a disposal. So disposal, when you disposal of a subsidiary, it needs to be deducted. The disposal subsidiary, there is some goodwill in it, that needs to be deducted to calculate the goodwill. Okay, so the balance is known as, balancing figure is the impairment, which is 6. Okay, now let us go and check the opening and the closing balance first. And for disposal of subsidiary, there is working 3. You see, sometimes it's not shown. Working 1 2 3. The reason working 2 and 3 are not shown, because it is hidden in the working 5 2 3 4. Okay, so disposal of subsidiary is working 3. Let us before going to that, let's see the opening and the closing balance 19 and 4. So if that, for that you have to go to the statement of financial position. You always, if there is an item to be dealt where you need the opening and the closing balance, you have to go refer statement of financial position. That is the place. Okay, and you have been given goodwill here 19 and 4. You see, so that 19 and 4 you need, and you need sorry, you need working 3 for disposal of subsidiary. So let us go to working 3. Okay, so working 3, disposal of subsidiary. That means first you have to calculate goodwill on the date of the accusation. Remember that, because that goodwill only you have to dispose. When you're disposing that goodwill, you have to deduct. That's why you need to calculate goodwill of Northern. Goodwill calculations are source of easy marks. You see, it's easy to calculate goodwill, so this should be something of getting you easy marks. Okay, even if the final answer is wrong, don't panic. At least your workings are correct, right? You have done number of workings, you will get marks. So first is consideration. You have bought it for 132, fair value offense is 28, and identified net assets at accusation has been given at 124. Okay, and now so the goodwill is 36, and they have told that 75% is has been impaired. So 70, so you can just take 20 75%. Okay, if you 75% here, so it is 27. Okay, another way, if you want to check this, just take 25% on 36. Okay, it should be 9. So carrying amount of the goodwill at disposal is 9. Okay, and this 27, this impairment needs to be, no, you don't have to take this impairment, because why? Because this is on the accusation date. Okay, we don't want to know what happened in the accusation date. We want to know what happened in the disposal date. Okay, because we have disposed of that subsidiary, so this impairment of goodwill 27 will not go. Well, just let me go this one and check. If you see here, impairment of goodwill is 6. Okay, working 5. So if you see working 5, impairment of goodwill, it is 6. Okay, this balancing figure. This balancing figure will go. Not that impairment of goodwill, this balancing figure. And disposal of subsidiary is 9. So I hope now you understood how 9 came. Because it is the carrying amount of the goodwill at the date of the disposal, which is 9 here. You see? This one. So now, we are over with what? Impairment of goodwill, which is the balancing figure. And also, no, everything else is finished. Now we have to go for income tax paid. Working 7. Okay, so let us go to working 7. This shows that so many workings are there. Okay. So working 7 is known as what? Taxation. One word is enough. One or two words. Tutorial note. Deferred tax can be charged to PNL or the OCI. Okay, so deferred tax can be charged to profit or loss also, or OCI, other comprehensive income. Don't forget the tax charge related to discontinued operation. Don't forget the tax. There's a tax for discontinued operation also that you have to take. Okay. So what do you have to do here? Tax. Where do you start? See, you have to first see an item. If an item is there in the statement of financial position, okay, this is a way to remember things. Always start with the opening balance and end with the closing balance. In between, you can do all the adjustments. In between, you have to do all the adjustments relating to what goes in the profit and loss account. Okay. So opening balance is this and closing balance is this. How do you get this balances? It is simple. Opening balance, but income tax and deferred tax we are not showing separately, you are showing together. That's why it is just taxation. Not deferred tax, not income tax. Together. Both the taxes there, that's why taxation. You can write deferred tax or income tax or just tax or anything. Does not matter. So you have to add both income tax and deferred tax and show in the one opening balance, and in the closing balance also add the income tax and the deferred tax and show as one balance. Like how here it is 107 and 61, 15 plus 92 and 14 plus 47. Okay. Then we have the charge for the year from profit and loss, continuing and discontinuing. Please, you need to label it like this because there are two. Don't add together and write 42. Even though the impact will be 42 only, but you have to show separately 40 for continued, 2 for discontinued. Charge for the year from profit and loss account. Okay. Then comes, so the cash balance which you want to get from taxation, how much tax you have paid in cash, that's what you wanted to find out, right? That's the balancing figure. Most of the time cash paid, if you want to find out, is the balancing figure only. Like here, here it is 81. Okay. And what you have to do? Deferred tax at disposal. So when you are disposing, there's a deferred tax for that. For that, you need to deduct it because you're disposing it of working for. We'll go to that later. Now, deferred tax on a remeasurement gain. We know the deferred tax is 25% and remeasurement gain. What is the remeasurement gain? That also needs to be added back. All this is from OCI, okay? This were there in profit and loss. Both profit and loss and OCI items will come here. 25% of 4 million because remeasurement gain was 4 million. Now we'll go back to the statement of financial position and also profit and loss to see the amounts, okay? Whether these amounts are correct or not. So that you understand how this amount came. 42 and all those things, except the deferred tax at disposal, because for that working for is there, we have to go to working for to say it. Okay. Now let us go to the statement of financial position. So here, when you go to the statement of financial position, it is under your current liabilities and non-current liabilities. Okay, you add this two, 15 plus 92, 14 plus 47. Deferred tax is there under non-current liabilities, income tax is there under current liabilities. Okay, it is. Now when you go to continued operations, okay, you have income tax here. You see 40 from income tax for continued operation, and discontinued operation also you have to go to the note 2 because it's only given the loss in the main statement of financial position. So you have to go to the note 2 and see the deferred tax, yeah, note 2, income tax expense here is 2, you see. And when you go to the remeasurement gain, remeasurement comes here. So I guess it was 25% on 4. You see, remeasurement gain is given in point number 4. This 4. Okay. Don't take this one. Don't take this remeasurement gain. The 3 and not this deferred tax liability. Okay. So here if you go to working number 7, taxation, no? So now you understood how you got 25% of 4, the remeasurement gain, deferred tax, 1, and so everything is done. Okay, the only thing is how this 8, deferred tax at disposal working for. So that for that we have to go to working for. Okay, so for working for is net assets and NC at disposal. We need to know what is the net assets and NC at disposal. Remember that, because these items will go in the statement of financial position and in income and profit and loss account. This question gives you the carrying amount of the net assets in all the individual financial statements. What does it give you? Carrying amount of net assets, but in the individual's financial statements. However, this will not include the fair value uplift that arises on consolidation. So whatever happens on the consolidation, it will not come in the individual account. It will come in the consolidated accounts, right? So the fair value uplift, it arises on consolidation. It's not in the individual financial statements. So all the deferred tax, all the deferred tax on this uplift. So because of this fair value uplift, there was a deferred tax on that. This also will not be taken into consideration. Okay. So let's see. You need to answer this. The carrying amount of the PPE at disposal will be, you need to write these things properly. What is it? Net assets and NCI at disposal. Okay, see, we came to find out how to get the deferred tax asset on subsidiary, right? To get the deferred tax asset on subsidiary, you need to first find out the NCI and net assets at disposal of the subsidiary. So you need to find the net assets. Net assets means all the assets minus liabilities. Okay, that's why we are finding out what is the PP carrying amount, what is the other stuff and all. Okay, so the carrying amount of the PPE. So the starting point is carrying amount of PPE, the non-current asset at disposal will be 80 million. This is the, as per the question. We'll see. It's 80. Just see this 80 PPE in the individual account of Northern. But the fair value adjustments and all, you have to do it. It's not there. Okay. So it is 80 as per the question, according to the question. Plus 16 million fair value uplift. Fair value uplift was 16 million. So it's an uplift, you have to add it. Less 4/8 depreciation. Depreciation was for 8 years, remember. At that time when you have acquired. But at the date of disposal, 4 years have passed by. Because I told you, it was there for 4 years before you disposed of. That's why it's 4 divided by 8. Okay. Useful life was for 8 years, and out of that 4 years went on. So from the date of the disposal, 4 more years are remaining. Okay, 4 years all have already gone by until you have acquired till the date of disposal, from the acquisition date to the disposal date. That's why 4/8. Okay, so 4/8, that means half of 16 is 8. So 80 plus that 8 will be 88 million. Okay, this is the carrying amount of PPE. Next, so rest all remains the same. If you take inventories 38, trade receivable 23, trade payables you have to deduct, and deferred tax 8 you have to deduct. Okay, bank overdraft of 2 you have to deduct, and your revised carrying amount. Okay, your revised. So whenever you're revising something, please write it that is revised. Carrying amount at disposal. At disposal, write the event also. When, at which date? Carrying amount at disposal is 129. Okay, we'll just go through the net asset previously given to you. You have been given inventory 38. This remains same, this remains same, but deferred tax liability here, if you see it is 6, right? This changed. Bank whatever is 2. Rest everything remains changed. PPE changed, deferred tax liability changed. That's it. 2 items changed. Everything remains the same. So here if you see, but 88 you can take, and deferred tax is 8. How 8? It is given in this paragraph. See, always they give a paragraph, then they give the calculation. First, they always explain, then they give the paragraph, do the calculation. So it's easy for you to understand the calculation. The reason, the logic behind the calculation, how you got 8 million. Deferred tax liability recorded on fair value uplift would have been 4 million. How? Because fair value uplift was 16 out of that 25%. So 4 million. This will have been released in line with extra depreciation. Okay. So there's some extra depreciation also. Why? Because you want the depreciation for the current year, but you have for the previous year also, right? So this will have been released in line with the extra depreciation. So the carrying amount at disposal will only be 2 million. Only 2 million, the carrying amount at disposal. How? Because this fair value uplift, okay, was 4. Okay, so this is carrying with an extra depreciation, right? This fair value uplift. So on that you have to take 4 over 8. Okay, so that's why you're taking on that 4 million 4 over 8. This is the depreciation part you are deducting from 4 million. Hence 4 minus 2, so 2. So the carrying amount of the entire deferred tax liability. This is 4 minus 4 into 4 over 8 is the carrying amount of the deferred tax, okay, liability. So when you're taking the carrying amount of the deferred tax liability, you also have to deduct depreciation. Like how normally when you take non-current asset, we deduct depreciation, right? Cost of depreciation into cost of asset into the depreciation, okay, minus that figure from the cost of the asset. So same here. Deferred tax liability was 4. From that, on that 4 you take depreciation, which is 4 into 4 over 8, which is 2. So 4 minus 2 is 2. So the carrying amount of the entire deferred tax liability at disposal is therefore 8. How 8? Because the carrying amount is 2, right? They told carrying amount is 2. So 6 per the question. In the question it was given in 6, right? Previously we have just saw that it was 6. So 6 plus that 2, 8. Okay. You just found out 2, and that 2 you have to add with this 6. You see here? That's how you get 8. The 2 came because of the fair value adjustment. And for that goodwill is also there. Sorry, depreciation is also there because that fair value adjustment is on which one? It's on property, plant and equipment. So on that we have depreciation, right? That's why we have to take that depreciation out. Okay. Okay, so in this income tax paid is also over 81. Okay, with that you have understood how we got income tax. But still we'll go through working 7 in order to see whether we have finished everything or not. So now you understood how we got this 8 deferred tax at disposal. 8 we deducted and we got 81. Okay. Let's see what the tutorial note says. Since the actual gain of 4 million will be recorded in OCI. Actual gains are recorded in OCI. Okay. Actual gain means relating to the pension. Okay. The deferred tax on the actual gain of 1 million will also be in OCI. So see, wherever an item goes, any tax relating to it, that item, that tax also will go in that place. Okay. Actuarial gain, if the gain goes in OCI, deferred tax relating to that gain also will go in OCI. That's what tutorial note is saying. Okay. Any remaining movement in the deferred tax on the pension will be included within charge to profit for the year. Any remaining movement in the deferred tax on the pension, if there's a change in the deferred tax, okay, movement, that will be included, the charge will be included in the profit and loss for the year. Okay. So now we are over with operating activity. Now let us go to the investing activity. Other workings are not needed for working this. So now next flow is cash flow from investing activity. Please put headings like this. Then we have 4 items under this. How much we have purchased the PPE, how much dividend we receive from associate, how much it cost when we purchase the associate, and also the net proceed on disposal of Northern. Don't forget this. Most of the students forget this one. The other 3, okay, understood. But the last one, we have sold a subsidiary. So when we sell a subsidiary, we get something, no? That cash needs to be recorded. So don't forget that. Okay. So purchase, the two purchases are outflow, that's why in bracket. Dividend received and net proceeds are inflow, that's why it's without bracket. And finally, this is your this thing, your cash flow from investing activity. Okay, it's in negative. That means you have purchased more than you have disposed, received from disposal. Okay, and you don't have to make the full statement of cash flow. It's not asked. Financing activity is not being given, so you cannot balance. Here, if you try to balance, it's wrong. Okay, most of you, what do you do? Let me go to the question and see. Are you given? Yes, since you have been given this to cash and cash equivalent, and also, are you given the overdraft? No. So most of you, what do you do? After investing activity, you add another section, financing activity, and also because you want to see whether it balanced or not. This cash and cash equivalent. It's not needed. It's not asked. You are wasting time. It's not asked. So just stop with it. Investing activity. Now let us go to the 4 items in the investing activity. So before we go on to the second part of this requirement, where we have to explain. So make sure that you understood all the steps. You have to write it later on in the next requirement. It's asking you to write all this adjustments relating to operating activity, not the investing activity, but let's go through it. Okay, so first one is, let us go in the order given. Okay, let us go in the working order, working two. So first we'll go through how much the proceed we are receiving on disposal of Norton, working two. So let us go through working two. Okay, process on disposal of Norton, clearly labeled. Number is also labeled. It's repeated this. So let us see what is the tutorial note says. The question tells you the loss on the disposal of subsidiary and gives you enough information to calculate the goodwill, net assets, and NCI. Okay, so this question, you can calculate goodwill also, you can calculate net assets also, you can calculate NCI also at disposal date. You have that enough information. You then need to work backwards. You need to work backwards to deduce the cash proceeds received from the subsidiary disposal. How much cash you have received. And also you have been given on the loss on the disposal of a subsidiary. So all this information will give you the balance is your cash received, right? So what else? Cash proceeds from the sale is the balancing figure. Okay, this is when you first time when you write it, this is question mark. You don't know this figure. It's a balancing figure. Okay, but we know that from this proceeds we have to deduct fair value of net assets and goodwill and add NCI. Then you will get the loss. Okay, so the loss on disposal per question is 29. It has been given as 29. This has been given. The other three workings are required. Okay, can we go to loss on disposal and see how much loss on, okay, from here, this 29, you see, from discontinued operations. So 29. Next next is goodwill at disposal, working three. Just now we finished, right? Goodwill on disposal, which was 9. So let us go to working three and see the goodwill at disposal. This 9, you see the carrying amount of disposal. Goodwill will be disposed of because you are disposing, so you deduct it. Fair value of net assets at disposal. Net assets working for 129. Let us go to working 4. So working 4 also we have done, and we have got this one, net assets, you see. That also will not be there anymore. You have disposed of, so you deduct it. Okay. I'm sorry, working 2. So this thing is there, this thing is there, this thing is there. Next is what? NCI at disposal. Here also it's under working 4, which we didn't cover yet. We'll go through it. So working 4, we have covered till 129. Rest all, what is it? The NCI at disposal date. You always have to know when you have acquired or disposal, when a certain event happens, you have to know the value of each item on that event. For example, you have to know the value of NCI or net assets or goodwill at the date of accusation, as well as at the date of disposal also. Okay, so since NCI we don't know at the date of disposal, we need to calculate it because you have to add it with your cash proceed to get a loss. NCI at accusation. How much was your NCI? It was 28 million. The fair value was already given to you. So NCI share of post accusation net assets. See, whenever you have the post accusation net assets, where there's an increase in net assets from the date of accusation till the date of disposal. That increase, okay, you have to take the NCI share of that increase and add it. Okay, so NCI was 20% because we have purchased before 80%. Okay, on that 129 minus 124, because net asset at the date of disposal was 29, but versus net assets at the date of accusation was 124. Okay, please go through the case study and see NS1. Next we have NCI share of goodwill impairment. Impairment you have to deduct. So how much was the goodwill impairment? Working 3 is required for this. Backwards, okay. So here you see impairment of goodwill 75%. This is 27. So this impairment, out of this 27, 20% only will go to NCI. Okay, 5.4 you deduct and you get 23.6. So this 23.6 is, you need to add it here. This, okay, you see at the date of disposal NCI. And finally, so what you do is you 23.6 minus 129 minus 9. On this side you will have some balance, on this side you have to balance, it needs to balance, right? 29. So the balance is 85.4. You can go backwards. Minus 29 minus 23.6 plus 129 plus 9, you will get 85.4, positive 85.4. It's a cash proceed, so it has to be a positive figure. Okay, so 85.4, that 85.4, is it 85.4? 87.4. It's 85.4. Just give me a time little bit. But here they're giving 87.4. Just check the let me check the calculation manually, because they are saying here it is in working number 2, 87.4. And here they are giving 85.4. Okay. See, it's 87.4. The reason is because there's another adjustments which needs to be done here below. Just see below. I've missed the 2 lines. So net cash impact on the disposal is therefore 87.4 million. How? 85.4 plus 2 million overdraft disposed. You had an overdraft of 2 million in the net asset of the subsidiary when you disposed it, right? That 2 million you have to add it. Because what I have told you, it does not matter whether it's an asset or a liability. When it's a disposal, the subsidiary is party, you have to add it. Okay. So with this cash proceeds, since it's a cash proceed, you have to add the subsidiary's cash also. Even though this is not a cash, this is an overdraft, it does not matter. Okay, according to IS7, you have to add it. When you see my video on IS7 where I would discuss, where I have discussed and showed you demos, I've demonstrated you with a question. When it's a disposal, how to adjust it. When it's an accusation, how to adjust the subsidiary's assets and liability. So where there we added. We didn't care whether it's an overdraft or a liability. No, we added if it's a disposal. Okay. So this is the cash proceed from sale. We add the 2 million overdraft disposed from the subsidiary. That's why it is 87.4 million. Okay. So this is over. Next we have next is purchase of associate, and also from that we'll also get the dividend received from associate, both from working number 6, 90 and 4. So we'll go to working number 6. So let us see. Now let me take working 1 is over, working 2 is over, working 3 is over, working 4 is over, working 5 is over. Okay, so we are left with working 7, working 8. Okay, so working 6 and 8 we have, 7 is also over, 6 and 8, 2 more workings we have. Okay, so working 6 is for associate, and let us read the tutorial note. Lots of students forget that dividend received from associate reduce the carrying amount of the group's investment. Okay, if you receive the dividend received from associate, it reduces the carrying amount of the group's investment. A lot of students forget this. Okay, so you don't forget. Again, opening balance. There is no opening balance for associate. It was not there in the statement of financial position. You have to go to the statement of financial position to see the opening and the closing balance. Right? Closing balance is 102. Okay. Share of associate profit has been given in the statement of profit as 16. Dividend received 40% of 10, because associate we have bought it for 40% and dividend is for 10 million. So we need to deduct it. Okay, dividend received will be deducted from the investment, and the cost of investment is the balancing figure. So this cost of accusation, that means you have spent 90 million of cash to get the accusation. So this 90 million is the cash outflow. It needs to be there in the, see whether you have bought or disposed a subsidiary or an associate, it comes under investing activity. Okay, so this 90 million will be there. Now let us go check the other figures, 16, 4 and 102. So statement of financial position, if you see investment, there is no investment. That's when opening balance 102, and then we have um, their share of profit 16. You see. Then what was the other item that I was missing out? Is there any item that I'm missing out? Dividend 10 million into 40%. Okay, we have to work out at the dividend. Okay, so it's 1.3. Purchase 40%, paid a dividend of 10 million. So that 10 million you cannot take wholly 10 million. You have to take 40% of that 10 million. Okay, as a dividend. So that, okay, and then 90 goes. Next we have, so with that, if you see here, see how much I have to go up. So purchase, you have purchased associate of 90 and 10 million. This is you are receiving, okay, 10% of, sorry, 40% of 10 million, the dividend received, and purchase 90 million you have purchased, and finally you are getting it. With this 82.6, stop here. No need to proceed. So we are over with all the workings. Now we have to go to the second part. Okay, we have been over. I have put a tick mark except working number 8. Okay, oh yes, you need working number 8 for how much you have purchased PPE. For this you need working 8. Okay, so here also from statement of financial position you can get the opening and the closing balance. I don't have to show. Disposal of subsidy, depreciation charge 20 million. Last note it is given, you need to deduct depreciation. The balance is your cash balance. Okay, cash balance is your cash addition. You have spent 84 million. Okay, another thing is working for disposal of subsidiary 88. So we saw the PPE when you are disposing of, we found out the value of the PPE 88 million in working for. If you forgot working for, let us go up and check working for. You see this 88, you have calculated 88. So this 88 needs to be there. Just since it is disposed, it is minus 88. Okay, disposal of subsidiary. That means when you're disposing of subsidiary, you are only taking PPE. Disposal of subsidiary does not mean you're taking the whole subsidiary, only PPE, because this is relating to PPE. Okay. So when you're disposing of the subsidiary, their PPE also you will be selling it out. So it will go from the PPE balance. Next, we are over with part A. Good news. Let us go to part B. Okay, so part B is about indirect method. You need to talk. Here you need to talk about, it's more like, and it's for less marks, so you need to write. Now, how do you start? Start with IS7. Okay, IS7 statement of cash flow states that indirect method of calculating cash generated from operations involves adjusting the profit. So it involves adjusting the profit. This is what you need to write. According to IS7, it states that if there's an indirect method of calculating cash generated from operations, what does it involve? Adjusting the profit or loss for the period for the effect of three effects. Please write the three effect. Change in the inventory, payable, receivable, or you can say change in working capital. Non-cash items. Okay, there are so many non-cash items: impairment, depreciation, amortization. Items which relate to investing or financing also needs to be deducted from operating activities. It should not be there. Okay, it needs to be removed out from operating activity. Okay. Now, with regards to Weston. So now, according to Weston, we'll say some. Will not say all the adjustments, but few is enough, because looking at the number of marks. Okay, I always say you need to be smart enough to know how many points you have to write. Looking at the number of marks. If it's for 10, 12 marks, you need to write 7, 8 points. If it's 4, 5 marks, 2, 3 points is enough. Like here, if I see, they have given 3 points. Okay. So first they have talked about the associates profit. Number one, okay, just see how they're explaining. First, they're giving points, then they're explaining, giving point, explaining, giving point, they're expanding on that. They just didn't say, okay, associate profit, add associate profit, deduct associate profit, service cost added, depreciation added, movement working capital deducted, added. It's not just addition or subtraction that you have to talk about. You understanding what I'm saying? So let's go to the answer. Okay, 3 items and 3 different bullet points. So this one is working capital. This is working capital. WC, this is, they talked about working capital. This is non-cash. This is also non-cash. This one is relating to investing or financing. So here, investing or, so here what they told, they gave the 3 points. Here now they are putting it in practice. Okay, with examples they are telling you. This is how you need to build up your answer. With regard to Weston, we are linking it to the case study now from here onwards. From here on, see, let me tell you, this answer is divided into 2 parts. Okay, this part, if you see, it is your knowledge, pure knowledge of IS7, applying from the textbook. And if this part, it is your application, you are applying to the case study from here onwards. First you give the knowledge, then you apply. First you give the knowledge, then you apply. Okay, so associates profits. Okay, now associates profits, undistributed profits of an associate are non-cash flow and so must be deducted from the group. See, first you told, just don't say add, deduct, add, deduct, add, deduct. Why it is added, why it is deducted, tell the reason. Because it's not cash item. So non-cash flow, so it must be deducted from the group's profit before tax. Moreover, an associate is a type of investment rather than a part of the entry's operating activities. And so any cash flow with associate entities are reported within cash flow of investing activity. You see, that's why dividend that we receive from dividend that we receive from associate are under investing activity. The amount that we use to purchase associate is under investing activity. Okay, because it is more like investing than the operating activity. Next is service cost, depreciation, impairment. 3 things we used. These are non-cash expenses and eliminated by adding them back to the profit. Okay, next is movement in working capital. Businesses buy and sell goods on credit, but only cash receipts and cash payments should be reported in the statement of cash flows, adjusting for the movement in working capital. So what happens? Adjusting for the movement in working capital eliminates the impact of accrual accounting, because when you did profit and loss, it is an accrual accounting, right? But cash flow statement says no, remove the impact of accrual accounting. That's why we adjust the working capital. Okay, in the current year, some of the year-on-year movement in working capital relates to the disposal of Norton. Okay, so some of the year-on-year movement in working capital relates to the disposal of Norton, isn't it? Rather than because of the cash flows with customers and suppliers, and so the effect of this disposal has been eliminated. So now this is how you need to explain. Now coming to part B. Before coming to part B, we have to read the case study relating to part B, which we didn't read. Okay. So Weston is considering purchasing equity shares in a regional airport called Minor. It will be one of the 3 shareholders. The majority shareholder would hold 61% of voting shareholders. The second shareholder would hold 20% of voting shares, and Weston will hold 19.90% of voting shares. The board of directors consists of 10 members. The majority shareholder will be represented by 6 of the board members, while Weston and other shareholders will be represented by 2 members each. A shareholders' agreement will state that certain board and shareholder resolutions require either unanimous or majority decisions. There is no indication that the majority shareholder and other shareholders will act together in a common way. Weston will provide Minor with maintenance and technical service and will send a team of management experts to give business advice to the board of Minor. Weston does not propose to account for his investment in Minor as an associate. He does not propose to account as an associate. Weston believes that the majority owner of the Minor will use his influence as the parent to control and govern it. So now you have to say whether it's correct or not. They told they didn't take it as an associate. Now you have to say whether it's correct or not. You have to know the rules of the associate and also the correct standard if associate is not the correct one. Okay, so let us do this and let us finish this question. So here the main topic is associate. Okay, so write it associate. This part of the question deals with the application of knowledge relating to circumstances when significant influence and control may be exercised. You should state and apply relevant definitions within your answer. Relevant definitions has to be there. As the question requirement is for a discussion, you should try to consider all relevant circumstances and try to avoid writing a one-sided justification of your conclusion. Because this is for 7 marks, at least try to give up more points, 5 or 6 points, so that you can justify. Okay, all, not just one circumstance. You have to give number of circumstances for 7 marks. Okay. So for this, how do you start this question? Answering. Definitely it is with standard IS 28. IS 28 deals with two things: associates and joint venture. Sometimes I told you a standard might deal 2, 3, 4 items also under one standard. So IS 27 is for associate also, for joint venture also. Okay. According to this standard, what do you have to define here? You have to define influence and control. What is significant influence? What does control means? Then only you can say whether they have control or influence. So significant influence is the power to participate in the financial and operational decision of the investor, but is not control or joint control over the policies. Okay, but is not control or joint control over the policies. But it's not control or joint control. Neither they have sole control, neither they have joint control. So it's not a joint venture, and it's not a subsidiary also. They don't have control. But they're talking about the influence. Influence is not control. You're not controlling. You just have an influence to participate in financial and operating decisions. Okay. When an investor holds 20% or more of the voting power of the investee. Okay, now you have to talk about that scenario where they hold more than, because this means you have significant influence, more than 20%. That's why you're talking about 20%, the next paragraph. So when investor holds 20% or more of the voting power of the investee, it is presumed that the investor has, it is presumed that they have significant influence, unless it can be clearly demonstrated that this is not the case. If the investor holds less than 20%, how much he hold? Weston? 19.9%. It's less than 20%. That's why this confusion is there, whether he is an associate or should not be. So investor holds less than 20% of the voting power of the investor. It is presumed that investor does not have significant influence unless such significance can be clearly demonstrated. It shows they do not have significant influence. Third paragraph, what does it say? One investor holding a majority share of the voting power can indicate that other investors do not have significant influence. What does it mean? See, let me demonstrate this with an example. Okay, in your class, okay, let's say uh, there's a vote. Okay, one of the child has, let's say, 80% voting power. Okay, one child only. There are 10 students, one child has 80%. That means the remaining 9 of you will be having lesser amount, small amount, 5%, maybe 2% each, right? Or 1% each, or 1.5, like that. So it reduces your, so that means you will not have a significant influence, right? Because if one person only has majority share, the rest the rest will not have that significant influence. They should have more than 20%. Okay, so that it will, other investors will not have a significant, they didn't say one investor, they said other investors will not have a significant influence. However, substantial or majority ownership by an investor does not, however, necessarily preclude other investors from having a significant influence. Yes. What does it mean? It means the sentence is saying even though there is one is having a majority ownership or substantial ownership, it does not mean that others will not have a significant influence. Sometimes they can have significant influence. Okay, now where did I go? So I7 states that existence of significant influence by an investor is usually evidence in one of the following. Now you are giving evidence from your standard. Okay, what does significant influence mean? Whether significant influence is existing or not? What are the following? You don't have to list all this. Maybe one or two is enough. Okay, so all these points. Quickly I will go through it. I'm not going to explain each of it. Okay, because I've explained it in IS 28. So representation of the board of directors on equilibrium and governing board of the investor. You should have a representation of the board. Okay. Participation in the policy making process, you should be able to participate in their policy making. Material transaction between investor and investor, material transactions, okay, not small amounts between both the investor and the investor. Interchange of managerial personnel, maybe you are taking their staff or they are taking staff from you who are in the managerial position, high level, okay, not small level people. Provision of essential technical information, so technical information is required. Now you are applying this to Weston, application to Weston. Okay, you have told that these are the ways significant influence can be, you can tell that significant influence exists or not. So now let's see. Weston will hold less than 20% of the voting power, so it might be concluded that significant influence does not exist. It holds less than 20%, so you can conclude that this does not exist. However, its holding of 19.9% is holding just below this threshold. Just below. Very small, right? 0.1% only. Moreover, there are other circumstances that suggest Weston will be able to exercise significant influence. There could be other circumstances. See, just by looking at one factor, don't say it's not an associate. So they are correct. We are very quick to say, okay, less than 20% not an associate, so they are correct. You should look at other factors also. Other circumstances needs to be seen sometimes. Okay. The other factors are given in different paragraphs. Let us read. Okay. The shareholders agreement will allow Weston to participate in some decisions. Some decisions they can, if not all, at least some decisions they can participate. The agreement shows it. It needs to be determined whether this includes financial and operating policy decisions or minor. They have to determine whether the decisions are financial or operating decisions. Okay. Although this is very likely. Okay. It's very likely that it would be financial or operating policy decisions only. Representation of the board of the directors combined with additional rights Weston will have under the shareholders agreement will give Weston the power to participate in some policy decisions. Okay. Additionally, Weston will send a team of management experts to give business advice to board of directors. He will send team of management experts to give advice to the board. How are you applying? You are applying all these points. Each one you are seeing whether you are seeing from each circumstance. Okay. You can give it in 2, 3, 4, 5 paragraphs. There are likely to be material transactions. You see. Material transaction is a keyword. They have material transaction with the investor. The investor, as Weston, will provide money with maintenance and technical advice. So maintenance and technical services are the material transactions. You need it. You cannot maintain with it. You need technical service. You cannot survive without this. Okay. So there is another way in which significant influence can be evidence. Another way. What is that way? Another paragraph. You see, everything is in different paragraph. Everything. Each circumstance is in each paragraph. I'm sorry, I got slip of tongue. I got stuck, so I was not able to tell the word was there. Right? It happens sometimes. You forget the word. You know the word, but it does not come out. So based on an assessment of all the facts, okay, this is how when you give conclusion like a advisor, you need to write that you have saw all the facts, and based on that, it appears that Weston will have significant influence over minor. Okay, this is your conclusion. This means that minor will most likely constitute an associate. Okay, so if they are an associate, what should they do? It's not enough to say they are an associate and stop with it. Definitely, the examiner has asked you why it's an associate. Why accounting treatment? They are interested in accounting treatment only. Okay, so they should be accounted. This is the key word. They want to know this. They should be accounted for using the equity method. Now, one of you or some of you might say the other way also. You might justify. It's okay. It's perfect. You will get marks if you are able to justify that they are not associate. So, therefore, they should not be accounted using equity method. That's also fine. But you have to justify. Okay. So, with that, we finished. Now, let us go to the marking scheme. Okay. First question is 18 marks. How this 18 marks is collected? Don't panic when you see the number of marks is too huge. Okay, we'll see. Profit 1 mark. Associates profit another mark. Pension service cost 1 mark. Depreciation 1 mark. Goodwill impairment 1 mark. Working capital 3 marks because 1 for inventory, 1 for receivable, 1 for payable. Tax paid 2 marks because workings are required for that. Okay. Pension contribution 1 mark. From investing, PPE 1 mark. Associate dividend 1 mark. Purchase of associate 1 mark. Disposal of Northern 4 marks. See, because more working is required there. So indirect method 5 marks, you can give 5 different points, and significant influence 1 mark per point, you can give 7 different points. Okay, to discuss whether they have significant influence or not. Okay, 7 points, total 30 marks. So that's it with this question. See you in the next question number 11. Okay, and make sure that you I have the playlist out there for all the SBR revision kit solutions. It's in order from 164 questions will be there before your exam comes. Don't worry. So your job is to go through it and subscribe to my channel and share this the playlist. If you want to share the playlist or specific videos, do share it with your friends. Okay, thank you.